The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, joining us now here on Market Talk, we welcome a new voice into the Market Talk family and discuss some of the action in this grain market as of late, and also talk about marketing corn at a low price environment. We're going to discuss all of that and more today with Craig Turner from StoneX joining us here on the show today. Craig, thanks for making the time to join us on Market Talk. Welcome in. Hope you're doing well.
Yeah, I'm doing great. I'm excited to be here. Thanks for having me.
Well, let's start. I want to get to that topic of marketing corn in a low price environment. That's the title of an upcoming webinar you guys are hosting here with StoneX in just a matter of days. But as we get to that point and kind of set things up, I just want to talk to you a little bit about some of this grain market action we've seen the last couple of days. This wheat trade, there's the weather concerns out there. Fund short covering, it seems like here. Saw that continue Thursday. Corn and soybeans to some degree kind of getting pulled along too, but really wheat has been the bright star here, it seems like, in this grain trade the last couple of sessions, Craig.
Yeah, absolutely. Wheat's the leader. Okay. And the funds are heavily short wheat and they're coming out. You take a look at what's going on in the southern plains, it's dry. There's concern about that hard red winter wheat crop. I take a look at soft red winter wheat, Chicago. We got 6.25 million acres for new crop. That's going to be low when we have the WASDE release those new crop figures. Russia, we have dryness in basically the southern part of Russia, and that's a big wheat producing area. India is concerned about their stocks. They may have to import. And now we're hearing about not just dry conditions in Europe, but a freeze. You add that all together, we're getting a rally here, and we're going to hit resistance point soon. Probably around 670, 660 in Chicago wheat, and in Kansas City we can still go through maybe 650 here, but it's tight, and it's helping the other markets go up higher.
Yeah, and to your point, some of those resistance areas, one has to wonder, we go up too quick too soon? Do we get into overbought territory? Do them charts start to look a little top heavy? I think that's probably the main concern, I think, for maybe some folks who are especially farmers, maybe looking to price in some wheat or lock in some floors, things like that. I mean, there's probably some concern here. To your point, we could maybe get overbought if we overdo this too quick here, Craig.
Yeah, absolutely. So when you take a look at the ending stocks in the United States, we're still okay. There's no shortage of wheat, even though we are a little bit tight. The United States has plenty of hard red winter wheat for ending stocks. Spring wheat's a little tight, and you can see that not just the United States, but also in Canada with export prices and basis. And the thing is, with the Chicago wheat, even if that does get a little bit tight, corn's a pretty good substitute for a lot of things, especially on the feed side. And then there's enough hard red winter wheat for the food side. So I think that that's one part. And then on the other part here, we are hitting technical resistance on the chart. So it's nice to get a rally this time of year. It's a lot of short covering. I don't know how much more new buying is coming in. And and also too, I will say this, there's still a pretty big carry in the wheat market. So, you look at May to December, and it's not like we're going to an inverse here. We're still much at a 55 to 60 cent carry, which just tells me there's nothing structurally wrong with the wheat market. And it's, it could, guys have been waiting to layer in sales. Now it's an interesting time to do that, or, look at collars to the downside.
Well, you mentioned how wheat has been helping support corn and soybeans, and I want to talk about that. It's felt like that maybe some of the rally in the row crops has been capped by some farmers selling here as of late. But when you brought up the topic of this upcoming webinar, marketing corn in a low price environment with me, I got a big old smile on my face because we talk about that a lot here on this show, risk management. So, I mean, your perspective on how wheat's helped these corn and soybean markets right now, and then talk to me about some of these challenges in terms of marketing in this current environment, Craig.
Yeah, so with corn, for example, we are at about a 2 billion carryout, and we're at a 14% stock to usage. And before the inflation of COVID, that would have meant corn trades in a range between 350 and 425. And a lot of us in these markets from, let's say, from 2013 to 2019, remember that, right? But now with the 15 to 20% inflation, we're really more of a 4 to 5 and a quarter type market here, to really break out in over 5 and well into over 5. The market needs to believe we're at a 10% stock to usage or a risk of going there, because that's really when things get tight and you have to start price rationing. The problem is with 90 million acres of new crop and a trend line yield, we're actually adding 400 to 500 million bushels on ending stocks. And we could have a stock to usage of 16 or 17%. Not only is that burdensome, we haven't seen that level since 2005, before ethanol and RFS. So, you can always get a drought. You can always get a lot of demand to come in, but China doesn't really want to buy from us unless we have to. There is other grain and oil seeds around the globe. Because of the high price of labor and land here in the United States, we tend to be the residual supplier of grain and oil seeds. So there's just a challenge when we get these weather rallies up into the high 4s, low 5s. Until something drastically changes with acres or with yield, we got to use that to our advantage. And whether that's selling carry in the new crop or selling the old crop, whether we're writing calls and buying puts, there's a lot of different ways to go about it. Selling straddles to for the short term, like on old crop. And we'll be talking about that on Tuesday in our webinar. But when we do the math here, it's just, listen, I would love to be bullish. My business is better when the market's bullish. So is StoneX, so's all the farmers. People like me more. My wife likes me more. But it's just, it's tough. This year and next year, it's just, odds are we're a range bound market, and we just got to take what the market gives us.
To that point, yeah, you got to be a smart marketer in this window. You got to have a plan, and you got to be, not afraid to stick to it. Right, Craig?
Yeah, you got to stick to it. And even like now, we have this rally, and it's like, okay, well, how far are we going to go up? If we can hit our targets on new crop at 480 or better, if we can start, taking a look at selling the carry for next year or even 2025. I think it's easier to make those decisions when you understand what are the realistic ranges in stocks usage. Like if we take away or add 1 million acres, or if we're going to be a 177 or a 182, like how does that affect price? I mean, just so everyone listening knows, to get back to a tight stock to usage next year for 2025, we got to be at 83 to 84 million acres with a trend line yield. I mean, what are the odds of us going to have 84 million acres? So, if now we can certainly be 177 or 175 or 173, but those are weather rallies. They're not demand rallies, so they tend to be short-lived. So if we just think of 350 to 425 before COVID is now let's say $4 to 525 or 550. We start getting into that let's say third or 40% of pricing. We got to sell a little. We got to layer into it. We got to be disciplined about it. If we were tight coming into this year at 10% stocks usage or lower, a couple of years ago, I was saying, we don't have enough acres for new crop to get back to adequate stock levels, which was true in 21 and 22. That's not the case now. So we just got to be a little bit more, you said it, disciplined with, using the rallies. And this is the time to rally, to start, getting a little bit more serious about sales.
Yeah, the eternal optimist in me, and I'm sure many folks as well, wants to be bullish. But to your point, I mean, the way things are showing up right now, you gotta be smart and maybe in some cases take what the market gives you here. Craig, real quick, as you look at corn, beans, wheat, is there one complex in particular that maybe concerns you more right now? And with seasonally, I know we tend to rally at this time frame, but is there one of these markets that you'd be a little more on edge with right now?
So I think that's a great question. We've been saying for a while, like the most bullish market is that Chicago wheat. That gets tight the fastest. The thing with corn is if we go to a 17%, if we are 90 million acres and eventually around a trend line yield, my concern is we're testing 4 at harvest. Like that's really my concern. On soybeans, if we have 87 million acres and a 52 yield, ending stocks are over 400 million. We're at close to a 10% stock to usage. You account for inflation, the old $9 to $11 soybeans or $8.60 to $10 soybeans that we used to trade in is now 10 to 12. So I'm a little concerned about soybeans going to the low 10s if things go really well. Plus, also, China just doesn't want to buy from us. And the South American estimates keep on now going higher instead of lower. So, if we can run up to $12 in new crop and beans, and we can make a run at $5 in corn, this year might be the year where it's like, okay, let's make some sales and move on. Because when you say, like, what am I most concerned about? I'm concerned about $4 corn and $10 soybeans in October is what I'm concerned about.
Great thoughts, Craig. And with that webinar again coming up on Tuesday, if folks want to join that webinar more, where can they get more information?
Yeah, absolutely. You can go to the website grainsandoilseeds.com. Both those words are plural, grainsandoilseeds.com. It'll take you right to the StoneX page for to register for the webinar. And we'll go over how we determine supply and demand estimates, what they mean for prices historically, and then based on if we're going to be tight, abundant, adequate, what kind of strategies you use, and we'll explain them.
Grainsandoilseeds.com. With that, Craig Turner from StoneX. Appreciate the time. We'll get you back on the show again real soon. Thanks for joining us.
Thanks a lot, everybody.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.